Hi everyone, this is Michael Bengiat. This is the Stock Picks Weekend Review video for November 12th, 2022. Let's go ahead and get started. Here's our disclaimer. You can check that out. And we're going to go as usual. We're going to review the current market environment. We have a couple stocks in our portfolio now, and we're going to review the stocks on our watch and ready list. Okay, so to get into the actual trading, we're still on a yellow stock environment indicator warning, caution. The best strategy is still swing trading, but we've now have our recommended stock exposure up at 25%. Now the problem we have right now is that we're getting, on Thursday we had a big relief rally. The October jobs report came in lighter than expected. Huge rally ensued that followed through on yesterday, which was Friday. So, but what we're finding is that it was all the beaten down stocks that that have been making all the moves. Here is an example. Here's just from one of my watch lists. And you can see we had Digital Turbine went up 60%. We had a bunch that went up 30 in the 20s. We had dozens that went up over 10%. And then on the 11th, yesterday, we had another massive rally, and these stocks continued. So, some of these have actually gone up 50, 60, 70% or more in just 2 days. So it's pretty massive short covering type move that's going on. So this, when you get all these companies, and included in this, you'll have Microsoft and Apple and a lot of the big caps. So of course, the indexes are looking much more bullish now. We have the Dow and now the Russell above the 200-day moving average, and the Nasdaq is still pretty far below, but the S&P is getting close to that. So we're still in a downtrend, and this really still is a bear market. And this kind of behavior, these just huge rallies out of nowhere that just kind of blow your head off, is really more bear market activity than bull market. So that's going on in the surface. But what we're finding, sorry, wrong slide. The leading stocks. Now we're always trying to buy leading stocks. We don't buy these bottom fishing stocks because really, if you look at a chart, where are you supposed to buy them? If you're just trying to catch a falling knife, well then, good luck. But there's no support levels. It's just a downtrend. There's really not a lot of, areas or of consolidation or anything. Some of them just been going down, straight down for about a year. So you have to be real careful with that. And so we don't traffic in those stocks. We're always trying to buy the leading stocks, the stocks that are at new highs, near new highs, and are breaking out, because just historically, those stocks are more proven to be the next winners. What happens after a bear market? It's very, very rare for stocks that led the previous bull market lead the next one. It just doesn't happen. That's why we have new leadership. Those stocks now are going to, sure, some are going to come back, and some won't. Some will end up going down and down and down and go bankrupt. Some will end up basing down here. They finally caught a bottom, and may go lower. They may finally make new rise and start making new bases, and form a new level of areas to finally rally from. So, but we're looking at stocks that are already doing that and are making new highs. But the last 2 days, and especially on yesterday, a lot of these names, you've seen them on our lists, like Hearn, was this Huron Consulting, Texas Roadhouse, Humana, Lilly, BJ's Wholesale. They all started taking some pretty big hits. And that's not a good sign, because we're just seeing the leadership just sort of starting to wane, and just more money rotating back into these things. So it's not a healthy situation. It hasn't been in a long time. And that gives us still a continued warning. It is not time to pile in. We just kind of have to be, we've taken a couple toe holds. We bought AEHR and BJ. AHR has made a nice move. We're up about 10.5%, but BJ went the other way. And just looking at other stocks, we're seeing just this mixed performance. We're looking for that time when stocks break out on balance. They just keep going. That's the environment we're looking for, and we have not seen that in a long, long time. So, but when it happens, it's going to be really easy money to be made very quickly. That's what we're waiting for. but we're not there. So we just kind of tipped our toe in the water. We're getting sort of mixed results. It's not giving us really any reason to continue to add more exposure yet. So we'll see. Let's go ahead and then let's go and take a look at the stocks now. So let's see, let me get to my charts. So let's start off with our position. We have an Air Test Systems. You see, we had a nice breakout. We had bought it right over here. We bought it at 22.25. Let's see. Yeah, oops, it's kind of hard in these charts. You really can't get, but we had just trying to clear out a lot of this area here. Had a nice little thing. We were a little extended, but that was okay. We broke out, and then we followed through on Friday. So a pretty nice move. We got earnings out of the way, which were pretty strong. We now have here 4 quarters of triple-digit earnings and really, really strong sales. So this stock is really doing well. They're in the semiconductor equipment area, and a lot of these have really been beaten down. And now this is one that's actually really close to all-time highs. Let's go to a weekly chart. Yeah, there's our all-time high back in September. Had a whatever reason, we came down, and then we've come and rallied back up. Now I want to show you one thing I just noticed on this chart. You can see here, this is the 10-week, which corresponds, this red line, corresponds to the 50-day. Notice how this, once it broke it, then this is a sell signal right there. If you were in the stock, well, you would have been probably out here. But if you had just said, okay, well, let me try it again, and you didn't get out, and it broke here in closing at the low, that was your sell signal. You'd be out. Notice how it's formed, resistance the whole way. It would rally up there, fail, rally, fail. That's a sign of a stock in a pretty strong downtrend. But look at the earnings and sales. They were still triple digits through this whole thing. So this is really a case of, if you look at the earnings and sales, there's really no reason why this should have been going down, but the market was taking it down. But but notice what happened. The market's making a new leg, and this one's actually rising up. And as the market's turned here, we're into almost all-time highs, just right off of it. So this is an example of the market just holding down a powerful stock that's really increasing its sales and earnings. Now this is a small cap. It's the whole market cap 676 million. So the sales are just minuscule compared to some of these big stocks, but they're increasing pretty rapidly. So, and there's not a lot of fund ownership. So this stock could be a really powerful leader going on in the future. So, and you can see the volumes picking up here too. So all looks really good. So we're going to hopefully hang on to this thing for a while. Now, if it goes up much more, we'll probably take a little bit of money off the table, since this whole environment is really pretty volatile, and we are still technically in a bear market. So we'll, just maybe take a little bit off. We'll move our stop up a little bit soon, and we'll see where that goes. So next one is BJ's Wholesale Club. Now we broke out here, and then we had a really strong high volume sell-off. That's not what we want to see. But look, really nice little cup with handle here. There's a little handle here, even though this doesn't say cup with handle. And we broke above that. So nice looking chart. Let's go to a weekly. Yeah, this is just about, I think it might be in all-time highs. Yeah, so we're at all-time highs in this stock, just over here, and we're just off of it. So it's looking pretty good. And we do have earnings in a few days. If we don't get any cushion, which is a shame this happened, but we have no control of that, we'll probably exit. There's been just too many stocks that have just plunged 20% or more on earnings, so we don't want to be sitting through that. So we'll see, but we still have a little bit of time. Okay, let's now move to our growth stock ready list, and the first stock is. We have a couple of stocks in the energy, in the oil and gas exploration, refining, and marketing. This sector has been doing pretty well. And yeah, this has got a really nice, we've come up here. We've been kind of tight trading, which we always like to see. And we've kind of broken out on Friday. Now, we didn't buy it because we, have 2 positions. That's enough in this market. We're not getting any confirmation, as I spoke about earlier. but this is definitely buyable. We've passed earnings, which have been triple digits. Again, really strong earnings and sales. Overall ratings are really strong. You can see a massive annual earnings jump up to $27. And this year, now it's coming back down. I mean, that wouldn't surprise me because we came from, 278, and that's a 10% plus move. Well, 895% move up. So, but it looks really, really strong. Everything looks good with this. It's definitely buyable, but we will probably just hold off because we'll see. I mean, depending how the market acts, maybe we can even add a quarter position or half position, have a little exposure in that. The next one is Diamondback Energy. Looks pretty similar. It broke out and we're in the buy zone here. Again, really strong earnings and sales. Another big jump up, not as much as the previous one, but really strong earnings and sales. The composite rating, which includes a lot of things into it in terms of earnings per share and sales and margins, all that. Return on equity, 99 out of 99. So really, it's very, very strong. So those are looking really pretty good. For our long-term outperformer, we don't really have anything on the ready list, though we've added a couple watch lists, which we're going to talk about in just a second. Okay, the next one is Inhibrx, INBX. This is our watch list. So here we have an RS of 97, and you can see we thought here that it had kind of gone up. First of all, we had a big move up. We were a $12 stock. We shot up to over 30. Now, what we like about this is that, okay, sure, we had a 200% move or so, and the stock really didn't sell off. So whatever reason, the buyers are hanging in there and the sellers are hanging in there, and nobody's really wanting to send this down. That's what we're always looking for after a big move. It just means that something's going on here. We may not know exactly what it is, but it's actually looking pretty good. You can see here the 21-day, the stock finally caught up with the stock. We're getting support there, and we've bounced off. We're looking to get this about 33.60. Yeah, right about. Sorry, it's hard to get it close exactly here. You can see here's 33.65. We're trying to buy it when it's clearing out these few days of what's proved to be resistance. It kept coming up here and closing down. We had a breakout here, but it closed down also. So we're watching this one. It's just not acting all that great, but it's acting pretty good. But again, it's a speculative biotech. It doesn't have any earnings and sales. So really, it's these live and die by FDA type notices. So you got to be real careful. The next one is Lamb Weston, which we did have a position in and we got kicked out, which was fine. We had a tight stop. We broke below the 50-day on Friday. If we had a longer stop, we would have had a bigger loss. But that's why we're trying to keep things real tight. If we're going to be wrong, we want to get out with the smallest loss possible. That's what we did here. This has knocked the RS down to 94. You can see it's actually breaking a little bit lower. So it's we're sort of on the edge here. If it goes much lower, we're going to take it off the list. This really shouldn't happen. But again, this is a defensive stock. Basically, they deal with potatoes. So, and the money's just coming out of this now, going into tech. So this just may be a casualty of the current environment. The next one is CF Industries. They're deal with manufacturing nitrogen fertilizers. Again, this has gotten a little volatile. See how remember over here we had nice tight trading and then we broke out from this little area here. But now look what's happened over here. We're getting big moves up and down. Look at here, we had a move down to the 200 and rocketed up. Then it came up high and closed down, and another reversal day. High volume, not a good sign. We're still watching it because maybe it'll tighten up and we can clear this area here, which is what we would try to do. Yeah, 108.48. We're right around there. Trying to clear this is where we would buy it. But we're not there yet, so we're watching it. The next one is BJ's, which we just already talked about. Now, we've just added some long-term outperformer watch lists. So these stocks all look pretty good. The first one is XL's Service. This has been a really nice winner. This is what we're always looking for, just nice, pretty smooth moves. Now, this has, of course, been pretty volatile. This was the coronavirus crash. But, generally we're just heading up. That's the monthly chart. Here, yeah, it's been volatile. It's not an easy one to hold. We've had this stock on our list before. And you can see just a lot of erratic movements, big moves up, and then it retraces all of it, and another one up. We had a reversal on Friday. But we're trying to buy this in this buy zone. We've come down. I would actually see if we even break below this buy zone, which is at 191.91. Sorry, 179.91, 10 cents above this high. And we're not far from that too, but I would sort of wait since we're getting a little bit of weakness, though it's on pretty low volume. And then when it turns up again, I would look to enter that. So that one's looking pretty good. The next one is Elevance Health. This is a company I don't really know much, but it's a $500 stock. And maybe it'd been something else and the name changed. So we're watching this. We're just about in the buy zone. This one, we're trying to get it right here. We have a convergence. This is a weekly chart. We have convergence of the 20-week and the 40-week, right about 486, 485. We're a little above that. Now, what we don't like, though, is, let's go back to the daily, is that we had this really high volume sell-off on, again, the rotation out of these healthcare stocks. But it did get support at the 50-day, right on the 50-day close, but it went down and touched the 200-day. So we want to see it, even if it went a little bit lower or just kind of consolidated around here, that could be a good buy point for this stock. Earnings have been really strong and growing, really nicely. So it looks pretty good, but we want to see less volatility. You can't be sitting through this. You'll get stopped out, and you'll be on the side then as the stock finally takes off. Next one is Exponent. Let's go to the monthly chart. Now, this is one of the better ones we've seen. Really just nice, clear uptrend. We are getting a little bit of the relative strength kind of tailing off here, but this is what happens. There's nothing major there. Actually, let me just go back for a second. Let's look at Elevance. Yeah, Elevance a little more choppier, but again, we're always looking for these kinds of moves that just kind of to continue higher without tons of volatility. This is, I'd say, Exponent, really one of the better ones that you'll see. And you can see here we stayed above the that's the 21 month. That's this pink line for a long time, going back to 2009. You can see there were a few spots, nice buy spots all the way up there. And then we broke it. Now we've come down to the lower one, which is the 40 month. And now we're bouncing off of that. So it's hard because you say, well, in hindsight, yeah, I should have bought it when it came down here. But, this is when the bear market was right in the middle of it. So it easily could have just busted open. But now we're getting some movement up. Let's go back to the daily. And we're just a little bit below this buy zone. So we want to buy it breaking out of here. And that's it. And we're back to our portfolio. So the market, I'd say overall has improved, but we still have to be careful. We're just seeing mostly improvement in the indexes and, beating down former leader tech stocks. But the other leaders are just not acting all that well. And so unfortunately, that's the story for many, many months now, but we just have to stick with it. We're waiting for that time when we can just, there's a saying, we just wait for there's piles of money sitting in the corner and we just have to go and pick it up. We haven't seen that. There hasn't been any piles of money. There's been holes that have been sucking your money right down the drain for a long time. But that's going to change. So that's it for this week. We'll be back next week, and we'll see how the market has fared. Okay, thanks.